Hello guys, welcome back to the channel. Thank you so much guys for the support, for the comments, for the messages. So let me wish you a Merry Christmas and happy 2023. And I hope you're going to work as hard as possible so that what you didn't achieve in 2022, you can achieve it in 2023. And let me also say that I'm not a financial advisor. Please do not use my content as a financial advice because I am not permitted to do so. So, have you ever been in a trade? Let's say, for instance, you've seen price running through the buy stops or sell stops, and then you are ready to enter the market, but then um, price keeps taking you out, and then finally price goes in your way, in your direction, but without you. Let me say that one thing that we forget to think of when we are doing our analysis is that when you are looking for the validation of your setup or of your system, whichever it is, you should also look for the invalidations. It's not every setup, even if it almost completes everything you look for in the setup, it doesn't mean you have to enter the market. It doesn't mean you have to take it. It can be invalidated. I do remember my first mentor who was teaching me what is the, retail based theories, or strategies. He would tell us that uh, if price does ABC, you know that's your entry trigger. But if you see ABC is there, but you see this type of candlestick, don't enter. If you see price doing this, it's been invalidated, do not enter. You know. So one of the things I've noticed is that uh, when people are doing the analysis, and guys, let me also say that I'm not a professional trader. I am a developing trader. I'm growing to become a professional trader. I am not a professional trader. So do not take me as such. I am not. I stand to be corrected. However, one thing I can assure you of is that I trust my system. I know what I have. I know my system. I know, um, you know, I know what I'm looking for in the market. I have a system that I completely trust, and that's the way it should be for every trader. Like, you need to understand your system fully in such a way that when you see another system being demonstrated wherever online or anywhere else, I mean, you become foreign to it. It becomes so strange that you don't even understand what they're talking about. That's the way. That's how I have grown to be. That I understand my system to a level that whenever I see someone else doing the analysis, it becomes foreign to me because it doesn't match my system. The only language I understand in the market is my system, and that's only the only thing I look for. And that's why most of you will notice that I don't even follow a lot of people. Like on Twitter, I only follow one guy, and that's the ICT. Maybe I'm gonna follow more, but not for learning purposes because I have a system already. And then on my Instagram, the few people that I follow are actually my friends or family members, of which if I were to unfollow, they say, hey, why are you unfollowing me? Otherwise, I, yeah. Okay, so let's go to our topic. So now you've noticed price taking out the buy stops, sell stops, and then you're like, okay, it's time for me to enter. And then let's say, for instance, if price has taken buy stops, you enter, then price keeps going up. So I'm going to show you one invalidation, just as I promised on the tweet I made that I was going to show you one invalidation that normally happens around buy side liquidity and the sell side liquidity that you should be aware of. And some of you are going to realize that you've been you've been falling victim of this scenario. So let's look at this. Right, so think for instance, we have our resistance, we have our support right here, and then price is making these swings, low, a high, we put in another high, another low, another high, another low, then another high, then another low, then another high. Finally, maybe I should change the color to red. Perfect. And then let me make this 4 times bigger. Perfect. This also, let me make it 4 times bigger. Nice. So now we see we have price came from this support level, and then price goes into this resistance, and then we break it. And then suddenly, as you start putting your maybe you go to M1, because I've noticed that many of you guys, whenever you see price taking out highs or lows, you go to the M1 time frame and start looking for breaking structures. Let's say you see it right here, which I do not recommend. If price has taken buy stops, sell stops, let's say on the 1 hour time frame, let's say for example this support level, this resistance level is the previous day's high, and then you go to the M1, I do not recommend it, but because um but I'm going to come back on that one. So then you put your cells here, you enter the market from right here, and then price comes back right here, makes this low, and then makes another high. And then once you are taken out, price comes here, and then goes down. Another scenario is that price will come here, put in a low, and then fails to take out this high. We do this, and then we fail to take this low, but we are also putting in a new low like this, and then finally we break it. I'm sure you've seen some things like this. Okay, now the thing is when price has taken out this, let's pretend this is the previous day's high. Price breaks it, we put in a high, okay, and then maybe this happens midnight, and this high you see here happens to be Asian high, either Asian high or Asian range, because those are different. The Asian range and the Asian session, full session, are two different things. So now price has taken a previous day's high, we've put in a high, we've put in a low, and we understand after price taking buy stops, so we need to go down. Price has to go down, but then price comes and makes another high, taking you out from here. Now, since price has taken out previous day's high, and this is Asian range or Asian session high, London opens, let's say London opened here, okay, or on another thing, price London can open here. Usually this is what happens. London will not open on this leg, it will open on the second leg, and then price goes through the Asian high before price going down. Why does this happen? It's because above this Asian high, we also have buy stops, just as we did above previous day's high. So when you go, listen to me, listen to this, listen very carefully. When you see 1 hour time frame taking out previous day's high or previous day's low, for it, in this case previous day's high, and then you go to M1 to look for a break in structure for you to enter, you are going to find it here. You will see a break in structure here. This becomes M1, and I will change the color to this. This is going to be M1, and then this is going to be M1, and then your entry will be somewhere here. Now, if you understand that market, that price is fractal, it does the same thing over and over. You understand that if this is H1 grabbing this liquidity, you understand that this formation on the 1 minute time frame is not enough to drive price lower all the way down to the sell stops. It means that M5 has to come and do the same thing, and M15 is likely, mostly with the currencies, is that M5 and M15 is likely to do the same thing. If you find this on M5, it is safe to enter. If you see it on M15, it is good to enter. But if H1 takes out the liquidity, and then you go to M1, you find the break in structure, I can guarantee you 99% that price is going to come back. You will grab maybe 10 to 15 pips, but the price is going to come back because M5 and M15 has to do this formation. It has to go through this as well. If you are going to backtest this, you will find that when price has taken a previous day's high or low, or let me say in general, buy side and sell side liquidity, M1 formation to sell will give you 5 to 10 pips, sometimes even less. And then M5 is going to make the same formation for selling, or it's going to print the template for selling. And sometimes M15 will also do the same thing. All right. And that's why when you sell on M1, price takes you out, and then they grab this liquidity from the Asian highs or the Asian liquidity, Asian range, and then price will come back in here, and then we go down. Now, here is the case. When you see this happening, okay, this is Asian and this is previous day's low. Immediately, you need to cancel this one. This has to be cancelled. The only liquidity pool you have here is this Asian high. It means the previous day's high has been invalidated. I'll give you examples. I'll give you examples. So I did look for examples and I found some examples. There is one on GU on the 7th of December. Let's look for that. Right, let's do that quickly. Yeah, this is 7th of December. Let's do this. Now I do have, okay, so now you can see this is on the 7th of December. I'll show you this quickly. I have this days divider. It shows this is the start of the day and the closing of the day. You can find it by going to the settings and then click on session breaks here, session breaks, and then you'll see this divider. Like this is on the 6th, from here to here, the 6th, from here to here, it is on the 7th. Now, let me zoom in so you can see what I mean. You find price opened here and then we closed here. The next day, which is on the 7th, started here and we went up and then came down. So now I'm going to highlight the low of yesterday, which is this week here, and then I'll put it as the sell side liquidity. Okay, and then I'm going to put in the sessions and the indicators. I have this one that gives me the Asian range, and then this one shows me the sessions. This one is Asian session, and this green one is London, and this last one is New York session. So now let me switch to M15. I want you to say something. So now look at this. So now we have price taking previous day's low right here in Asian session. As you can see, price opened here, came down, went up, down, up, and down. Now, if this is Asia, this is previous day's low, and this is Asian session. Okay, price went below previous day's low, and when price has taken liquidity, we need to see displacement. We need to see price leaving that area with so much momentum. Price did, but then price came back, or in Asian session, this happened in Asian session, and we see London opened um, on this candle right here. This is where London opens. I'm going to highlight it, a vertical line. This is where London opens. Okay, now I'm going to put Asian range. This is the Asian range. Now look at this. When you came on your charts, immediately you see that price has taken previous day's low, and then you tell yourself, okay, it's time to enter the market. Okay, and then you see price has gone below once and twice, but price is not supposed to go below it multiple times, breaking structures, because if we have put in a low, we've put in a high, price should not go below this low. It should come here and then we see displacement. But in this case, we see a high, a low, a high, and then price goes deeper. But this is all happening in Asian session. London opens on this candle, okay, on this candle right here. So now you are going to validate this setup. Have we taken the sell side liquidity? Yes, because price has gone below previous day's low. And then this high will be your breaker. It will be a breaker, and then you're going to make your entry here. But then we see price going up with two candles and then came back and took you out. The reason is this setup of previous days low liquidity has been invalidated. We should not see price breaking structures to the downside after price has taken sell side liquidity, and we should not see price breaking structures to the upside if price has taken the buy side liquidity. So for me, this liquidity grab has been invalidated. What I'm looking for is previous day's low. For instance, price opens, takes it, and then we break structure, we come back to buy. Another thing that could happen, I need price um, go up, make a high, then price fails to take this low, we break a high, then we come back to buy. You see this? So that means I'm not expecting price to break this low. This law should not be broken. This law should not be broken. This is what I'm looking for me to validate my setup. But if you see price coming, this leg coming to break this law, it has been invalidated. That means this grab of liquidity here has been invalidated. Okay, and that's exactly what we are seeing right here. So now, if this is Asian range and price has gone through it, breaking this law, so I invalidate. Now hear me well. I am saying I'm not saying you should do it. I'm just showing you what I do, and it's up to you to do to do the same, or to do something better or something else. But this is what I do. I invalidate this setup, and the next liquidity becomes this Asian range, and I ignore the previous day's low. Why do I ignore it? Because price has broken the first leg, the first swing low that went through previous day's low. Let me repeat that. Price has made a low that grabbed the liquidity from previous day's low, made high, and then price came and made a new low, another swing low after breaking this low. So to me, since this should not happen, this grab of liquidity, it is invalidated. Now what you are doing is, once you see that this has been taken, you just hold on to the trade. Like, no, it's okay because the previous day's low was taken, supplies has to buy, but this break of structure is telling you that this has been invalidated, and your new grab of liquidity is this Asian range liquidity. And that's why you see, when London made a false high, you go with it, then 3 candles took you out, but price respected this low. It got respected, and price respected this order block. So your entry should have been here, not here. So now, because when you entered here, because of the previous day's low that has been taken out, ignoring this breaking structure here, first of all, what happens is you have a stop of 30 pips. That's the first thing. And then you are also, I think, we can check that. You are also buying in premium. We buy the discount and we sell premium, but in this case, you are buying the premium, which is incorrect. So now I will show you another example. I'll show you another example which is on the EU on the same date. EU 7th of December. Yep, it's here. So I'll use the replay feature. On M15, here it's the same thing. Previous day's low, it's taken. They check what time the London opens. All this is Asian session, a full session of Asia, but then we also have Asian range, a high of the Asian range, a low of Asian range. Then on this candle, London opens. So now we have previous day's low, Asia opens, takes out previous day's low, displacement, price comes back, fails to take out this low. We are still waiting for our kill zone. Our kill zone starts at the London opening. So price comes back, it takes out this low, which happens to be Asian range liquidity. So I'm going to invalidate this setup, move from previous day's low to the current low that has been taken. Then London opens here. We have a swing high, so from here to here, and boom, what is this? Price has moved from premium into discount. We have an order block right here, and we enter our stop below this swing low, which is about 12 pips, and then we hold until to the next liquidity pool. So if you were using this liquidity, which is previous day's low, your entry should have been, because I know some people who open trades in Asian session before the opening of London, right? So when you woke up early and you saw this scenario, what did you do? Be honest yourself. You would have entered here, right? Because of grab of liquidity, breaking structure. So your entry would have been here, and your stop would have been below this low, right? And then you would have been taken out. And this is why you need to wait for the kill zones. Like, you have to trade within the kill zones. What are the kill zones? The very best timing, like the window where there is the trading window where there is so much volume in the market, that is the kill zone. For me, it is the first 2 to 3 hours of every session. All right, the session I'm talking about is London session and New York session. So now we have an invalidation. If I had woken up right here, I wouldn't have taken this trade because I'm outside my trading window, which is the kill zones. So I move my liquidity point to here, and then I need price to run through the Asian range liquidity, a shift in structure. This is a shift in structure. Price making relatively equal highs. Price comes into the order block, entry, stop here, and then we target the next liquidity pool. And I'll talk about that some other time, about making targets and liquidity pools and the drawn liquidity. I'll make a separate video for that. I should probably give you one more example. which happened on the 19th of 19th. Um, okay. Yeah. Is it 19th? Uh, just a second, guys. Let me double check this. Now, I want you to look at this. On the 19th, we see price taking out this low. Okay. Price took out the low. Have this high. Now, if price broke structure, we expect price to come back to mitigate this. Mitigation broke. So let's go to M15. I'm expecting sales because we broke structure. I do not expect price to come and take out this high because we broke structure. So I'm going to move to M5 because this is where I want to show you. I'll put the sessions here. So price, this is Asian range. Price goes up. We put in a high of the Asian session. This is Asian session. And London session opened on this candle. Okay. Now we're expecting sales. Why? Because price has broken structure to the downside. This, and we expect price to come back for mitigation to continue down. So that's why I'm expecting sales. But then London opens on this candle. It goes up, takes out this Asian high, and then I'm expecting price to come and break this low like this to take out this low so that when price gives me a retracement here, I could sell. Okay. But then price fails to take out this low, price goes up and takes out a high. Right? Still in London session. Then suddenly price gives a displacement down, taking out all the lows. 1, 2, all these lows are taken out. Okay, so now the liquidity that that is valid, the liquidity graph that is valid has been moved from here to here. Because if price was done grabbing liquidity from this Asian range high, we should have seen price taking out this low. But price went up one more time. And I think this is what they call the 3 levels of lies. I've seen some people calling it that way. When price makes a high 3 times, then we expect a displacement to the downside. So let me go to the lower time frame. Let me check M1. So price goes higher, we make one low here, price fails to take out this high, we go down, price takes out all these lows right here. Now I want to see, for now this is a breaker, you see, because price these candles right here, 1 2 candles is an order block. Why? We had a breaking structure, price came back, but then it failed to go up to take out this high. Instead we broke this low, right? So now these order blocks, they become a breaker, and that's why when you see after price taking out this low, price came back into the same order blocks, which are now breakers, and then price went down. So you see how I moved my grab of liquidity from here to here, because if I go back to what I said, if price takes out a high or a low which has liquidity, we should see a displacement that breaks uh, uh, a structure, and then on the retracement into that structure, that is where we look for the entry. Okay, so now I have invalidated this grab of liquidity here. So instead of chasing price, like, no, we have to sell because we took liquidity, we have to sell, you agree with the market and humble yourself and let the market show you what it wants to do. I think this video has gone longer, but let me see if I can find one more one more example, and then I'll be done with this video. I think it is on EU on the 2nd of December. Just a second. Okay, I want you to see this. So now this is the previous day's high, market as a buy side liquidity. This is the Asian range, and then we also look for the opening of London, which happens on this candle, and then the opening of New York, which happened on this candle. I'll change the color. No. Perfect. So now we see, I want you to pay attention. I'm sure you're already tired of the video because it's quite long, but bear with me, guys. We see a breaking structure. Okay, that's a breaking structure. We see price coming after grabbing liquidity. We break structure, but we come back in here to sell. Okay, so we sell here. Our stop goes above this high. Okay, like that. Now, did we take any liquidity? Yes, we took previous day's high. Did we see displacement to break structure? Yes, here. Did we see a retracement back into the structure that has been broken? Yes, we have it here. So can we enter? Yes, we can enter. Now, I want you to think of, before I say it, what is wrong with this trade? Why is it that price kept going up and took us out? I didn't take the trade. I'm just showing you how to find invalidations, you know, in your setups. If we have a grab of liquidity, a break-in structure, and this is the 2022 ICT model, why is it that price went all the way up to take us out? I'll give you a second, or you can pause the video to think and see if you're going to find, if you're going to have the same answer as mine. The answer is we are outside our kill zone. This candle here is London session. So I do not care if I have this scenario outside my kill zone. I do not care about it. I will not pull the trigger. If we see this outside our trading window, we should not be interested. The mistake that we do is that when we just wake up, oh, right here we have a breaking structure after grabbing liquidity, it's entry. There's a retracement, enter, and then you enter, and then price takes you out. You are not trading when there is volume in the market, or when in the kill zones. Now look at this. After price has taken you out, for me this setup is invalidated until we see that happening in my kill zone. So I put the sessions indicator. You see, this is in Asia. So now I move, I'm sorry, let me use this. So now this grab of liquidity here is invalidated according to my system, and I move it. The next grab of liquidity becomes the high of Asian session. M5, and now Asian session, grab of liquidity in London from Asian session, displacement, but we don't say grab of liquidity. But most of the times when price does this, right, and you enter here, there is a chance that price will go in your favor, because price, you are in your kill zone. Price has grabbed the liquidity from previous day's high and Asian high or old high, whichever it is. There are chances the price will go in your favor. And the reason why we didn't see a break in structure right away, so that we can expect price to go back up to sell, as you can see, you can look at this candle. We had news. So when there is news, you expect that everything you see price doing before the news is an accumulation of their orders. So we retail traders get trapped both ways, buying and selling. Why? Because the big guys in the market are accumulating their orders. So thank you guys for bearing with me in this long video, but I hope I have explained how to find these invalidations, how to adjust when you see invalidations in the market, especially based on the buy stop, sell steps, buy side liquidity, sell side liquidity. So I hope you found value in this, guys. Share the video, retweet, and have a fantastic um, weekend. Enjoy your holidays, and within the holidays you can backtest you, but don't forget to have time for your families. So God bless you guys. and I'll keep on uh, uploading some videos. I have a lot of topics, but yeah, I will see as time allows. I'll keep on posting. So thank you so much, guys, and take care.